Hello and welcome to the 7th webinar in the Power Tools series. I'm Kinkini Banerjee, the Senior Manager of Coalitions Relations at US Breastfeeding Committee, and I'm so glad to have you join us for this session. This series is organized as part of USBC's training, technical assistance, and capacity building support for the network of state, territorial, tribal, and community breastfeeding coalitions across the United States. Access to these webinars is free and open to all interested breastfeeding coalition leaders, members, breastfeeding advocates, and to anyone involved in forming or leading nonprofit organizations in the breastfeeding field. Webinar announcements are sent through USBC's announcement emails at and if you're not already on our mailing list, you can join us at www.usbreastfeeding.org/signup. All our webinars are recorded, and you can find the archives of past sessions on our website. The details and handouts for this session, as well as our past sessions, will be found on the website. So you should have got a confirmation email with all the details, or you go to our website and then go to the Power Tools page on our website. Go quickly over some logistical details. We have a large number of attendees today, so all participants are in listen-only mode. We will be taking questions during the session, so please be sure to type in your questions during the session. After each segment, we'll take a short pause and see if there are any questions. So let me show you how you can send us your questions. On the right side of your screen, you should see a control panel. If you don't see it, it might have been minimized. Click on that orange tab and it'll pop right back out. And scroll below the audio section, you'll see a tab, blue tab, which says questions. Click on that tab and it'll open up a text box for you to type in. If you have any tech issues during this session, please email coalitions@usbreastfeeding.org and someone will be able to help you. And that brings me to today's topic, top 10 risks in nonprofit management. Most nonprofit leaders are well aware that organizations they serve must embrace risks to make a positive difference in our world. Yet too often, our nonprofit organization programs are too narrowly focused on operational issues and miss the big picture dangers that leave a mission in peril. This thought-provoking webinar will focus 10 risks most likely to threaten your coalition's success in 2015. Learn practical tips to help your coalition steer clear of legal liability and other mission-draining consequences of misunderstood or overlooked risks. Many coalitions have been struggling with risk management issues that this session will cover. We'll hear on everything from D&O insurance to contracting snafus. And today we are especially excited to share with you the wisdom of Melanie Lockwood Herman, who's the Executive Director of the Nonprofit Risk Management Center, a widely recognized nonprofit resource sharing center serving nonprofits in the US and internationally. Melanie has held management positions in nonprofit organizations throughout her 30-year career. She manages the center's consulting practice and each year serves as the lead consultant on projects for large, complex nonprofit organizations. Melanie is the author of more than 15 books covering a wide range of risk management issues, and each year she delivers numerous workshops, seminars, and keynote presentations. In August of 2013, Melanie was named to the 16th Annual Nonprofit Times Power and Influence Top 50, a list of 50 most influential executives in the sector for the last 12 months, selected for the impact they have now and for innovative plans that they are putting in place to evolve the charitable sector. Melanie has a BA degree in Urban Affairs from American University and a JD from George Mason University, and she volunteers extensively and serves on the board of a number of national nonprofits. For many of you, our coalition contacts got a personal note from USBC Executive Director Megan Renner yesterday telling you how valuable this presentation would be to you. Megan did a day-long training with Melanie a couple of years ago during a week-long program for nonprofit executives at the University of Notre Dame. And she said that her day session with Melanie was the most entertaining and useful part of that week. And with that, I have great pleasure in turning it over to Melanie. Take it away, Melanie.
Thank you, Kinkini. It's my pleasure to be with everybody today and to talk about this subject. It's always fun coming up with a top 10 list for a program like this. I try to change my list up and choose different topics based on the audience. So I did have some fun pulling together this list for you today. So let's go ahead and look at the next slide. And I think this is a reference to our newsletter. I just want to mention that the Nonprofit Risk Management Center does produce a complimentary newsletter, which is available online. It comes out 3 times each year, and it's called Risk Management Essentials. And what we try to do with the issues of this newsletter is focus on a particular theme. So the issue that you're looking at now is called the Liability Fundamentals issue. So all of the articles in this newsletter address legal risks facing nonprofit organizations. As you'll see, the article on the cover page has to do with liability and the board, what governing teams need to know. So all of the past issues of this newsletter are available online at no charge at nonprofitrisk.org. Let's go to the next slide, and I want to tell you about another publication that we offer that's also free of charge. This publication is called the Risk eNews, and it's our weekly newsletter. It contains a single topic, a single article, so it's very short and easy to read, and it usually relates to something that I've experienced in the consulting work that I do with nonprofits or in my travels around the country, and I try to relate that, or something I'm reading, something, it may be a magazine article or a book that I've recently finished, and I try to relate that to the discipline of risk management. And so this comes out every Wednesday. You can subscribe at nonprofitrisk.org, and when you go to nonprofitrisk.org, you'll see an orange bar in the front, and you'll want to click on that bar, fill out a couple of fields, and you'll be subscribed to that Risk eNews. I just want to let everybody know that if you sign up for this and you start to receive this from us every week, and if at any point you grow tired of receiving it, if you're getting too many e-newsletters, it's very easy to sign off by just simply clicking on the subscribe button, the unsubscribe button rather, at the top. So I hope you'll consider signing up for the Risk eNews, and that these 2 publications will be beneficial to you as you work to improve the risk management function and activities in your nonprofit organization. All right, let's keep going then. And let's start with the first in my list of 10 risks facing nonprofit organizations. So the first one I'm calling naive crisis planning. Let's go ahead and look at the next slide. And as we do that, let me just remind everybody that the handout for this program looks a little different than what you're seeing on the screen, because the presentation on the screen has lots of images. It's a very, very large file. And so what I've done is I prepared a handout that has each of the 10 items with some text below and plenty of space for you to write notes. And the reason I like this style of handout is that I think it's really important as an adult learner that you choose what makes sense, what works for you, what's relevant to your organization, and that you take the time to write down those items, those tips, those suggestions, those insights, if they are relevant to your organization. If I say something that's not relevant, that's not useful, then just keep moving, and that you don't need to write it down. All right, so the fact of the matter is that many nonprofit organizations during the course of their histories will face a crisis, and some of our organizations will face several crisis events. But we don't get to choose either the source or the cause of our next crisis. It's not up to us to decide when a crisis is going to hit. And it's also not up to us to decide when a crisis will hit. So when I say naive crisis planning, really what I'm suggesting is that, unfortunately, many nonprofit leaders believe that somehow they can protect their organizations from a crisis event by doing certain things, by taking certain steps. And the truth is we can never completely protect our organizations, but there are some things we can do to be better prepared for a crisis. So let's look at the next slide. On the next 2 slides, I have a couple of tips I want to share about crisis management planning. So the first one is that warning signs that precede a crisis often appear but are ignored. So unfortunately, after the crisis hits our organization, sometimes we look back and say, my goodness, there were signs that came up, that appeared that this crisis was going to hit. So, for example, a lawsuit against your organization might be preceded by a series of complaints, concerns, somebody going public with their unhappiness with what your organization is doing, or their concern about the direction your organization has taken. And once the lawsuit is filed, then you realize that, oh my goodness, we had a heads up. We had an opportunity to address those concerns had we only been paying attention to them. And instead we waited or ignored them, and they turned into a crisis. So that's the first crisis management truth. The second truth I think is really important, and it's actually from a great book on risk management called Surviving and Thriving in Uncertainty. And I've included the quote on this slide, and that is, the crisis you prepare for may not be the one you experience, but that preparation will improve your resilience come what may. This quote is wonderful for a number of reasons. One is that it points out the fact that organizations need to be resilient, that that's a skill that we all need, and it should be part of good risk management or risk management practice. We need to be able to bounce back from whatever happens to us. And as I said before, we can't predict the source or cause of our next crisis, and so we need to be ready for almost anything. And no matter what type of crisis planning you do, it may be as simple as preparing a list of key contacts, of stakeholders, a list of media contacts, people that you'll reach out to if you need to reach the media in a crisis. And you may be doing it for one type of crisis, but that same list, or either type of list I've just referenced, will be very helpful should a very different type of crisis occur. So the crisis you prepare for may not be the one that actually occurs, but any preparation will improve your ability to bounce back. Let's go ahead to the next slide. And so a couple of other tips. I wanted to suggest that you think about cultivating what I call predictors of strength. Predictors of strength. So you can't avoid a crisis altogether. You can't make one go away easily. You can't dodge it altogether. But what you can do is work on those things that will help your organization survive and thrive despite a crisis. So the first predictor of strength, in my experience, is the availability of a flexible crisis management plan. And essentially, it's no more complicated than a document that explains what you will do in a crisis. It may include things like, the following group of people will come together and serve as our crisis team. It may include a statement about the order in which you will notify key stakeholders of your organization. Perhaps you'll notify the board first, then the staff, and then maybe clients of the organization, and then maybe the media after that. So the crisis management plan that you develop for your organization doesn't need to follow a specific format. You certainly don't want to try to copy somebody else's crisis management plan. You want to create one for yourself. But an important thing to keep in mind as you write this crisis management plan, as I said, it may be a simple document, maybe 4 or 5, 6 pages in length. It doesn't need to be voluminous. But an important thing to keep in mind as you write this plan and as you read the plan is to ask yourself the question, would this be relevant if there were a crisis that had to do with confidence in our leaders? Would this be relevant and would this work if there were a crisis related to a weather event, right? Would this be relevant if we had a crisis that was related to financial issues, such as the loss of a primary funder? So as you read through your draft plan, ask yourself, would this plan work? Would it make sense if our crisis events were very different? And come up with a couple of examples of crisis events you could face and kind of test them against the plan. The second predictor of strength I wanted to point out is the subject of relationships. And what I've discovered in advising nonprofit boards as well as nonprofit executive teams is that in a crisis, you're going to draw strength from the very positive, trusting relationship between your staff and your board, between your volunteers and your paid personnel, if you have paid staff in your organization. And if there isn't trust, if there's mistrust, between those two teams, in a crisis, what's likely to happen is one team will be pointing its fingers at the other, and the other team will be pointing its fingers back. The finger pointing of blame becomes a serious additional issue you have to deal with if you don't already have trust and great relationships between the board and staff. And so to get ready for a crisis, to get ready for any crisis, I would encourage you to think about those relationships. Do we have a healthy relationship? Do we have a relationship where there's mutual trust and support in one another? And if we don't, how can we go about fixing that? And one of the things we end up doing when we consult with nonprofit organizations and we do what's called a risk assessment is we often discover that there's some cracks in those relationships, and we try to offer suggestions for addressing those difficulties, because we know that when a crisis hits, those poor relationships will be exacerbated and cause even more trouble beyond the crisis itself. All right, let's go ahead to the next slide. So we'll cover this topic, and then we'll take a quick pause and see if there are any questions related to these first two topics. So the second risk on my list is unhappy stakeholders. And of course, this dovetails a bit with the first one, because many crisis events come about because an organization has unhappy stakeholders. So let's go to the next slide. So I wanted to just raise the question, who's unhappy? Who could possibly be unhappy with the leaders of a nonprofit organization or with the nonprofit itself? Well, the fact is there are quite a few different groups and individuals within those groups that might be unhappy with your organization. And the example I'm sharing on the current slide is an unhappy donor. And you see a book by Doug White called Abusing Donor Intent, like a case study of a lawsuit that was filed by an unhappy donor against Princeton University. Then I've also included a screenshot of the website LegalZoom, which features an article called How to Sue a Nonprofit's Board of Directors. So don't be naive in thinking that an unhappy stakeholder probably wouldn't know what to do or how to bring a lawsuit against your organization. The fact is, anybody can go online and quickly find a how-to guide on how to sue your organization. But donors are just one example of the types of people that tend to be unhappy with nonprofits or may be unhappy with a nonprofit organization. So let's go to the next slide and talk about some of the tips for dealing with unhappy stakeholders. A second category of unhappy stakeholders would be volunteers. And although some of your volunteers may be very compliant and agreeable and do everything you ask them to do and never do anything you ask them not to do, in some cases volunteers become unhappy. And there are lots and lots of reasons for that. Lots of reasons. Feeling that they're being taken advantage of, feeling they've been misled. They were told that the volunteer opportunity was one thing and it turns out to be something quite different. So many different reasons why volunteers are unhappy. So here are my tips for dealing with unhappy stakeholders in general, and this would be both volunteers as well as donors. The first tip is make certain that you provide ample opportunities to complain. Now, some of you on the call today are thinking, my goodness, people complain on their own. We don't need to make it any easier for them to complain. But the truth is that you'll do nothing but make somebody more frustrated and unhappy if you make it difficult to complain. I don't know if anyone's ever been on a website and been having difficulty with a company or a product and wanting to just simply talk to somebody about that product that you're trying to purchase or that you have purchased in the past, and how frustrated you get when you cannot find a phone number to call. You can't find anyone you can call to talk to deliver that complaint or ask that question. We want to make certain that we make it super easy for people to complain, because when someone complains, we're giving them an opportunity to share information that we can use to fix something that needs fixing, or we're giving them an ear to speak to. We're providing that a shoulder to lean on and that willing ear to hear their concern. What we don't want them to do is to become so angry that they're not able to reach us and share that concern that they go online and start posting negative information about our organization. Another tip is to listen carefully to those complaints that you receive, and keep in mind that when somebody calls with a complaint or emails a complaint, the very first things they say may not be the root of the problem. Here at the Nonprofit Risk Management Center, we take lots and lots of questions from individuals who have questions about risk management in their organizations. And one of the things I'm constantly telling our team to do is when someone calls with a question, hang on, don't jump to answer the question too quickly. Make certain that you really understand it. Often the real question is not the first that the caller poses. The real question is a little bit into the weeds, and you have to be patient and listen to the whole story. So listen carefully, take action based on the complaint, and follow up. Let the person complaining know what you've done. Another tip is clarity. Clarity is so important when you're working with volunteers, when you're working with donors, when you're working with employees and other stakeholders. Err on the side of being super clear about the rules of your organization, what the donor or volunteer can expect through their experience, and just try to be as explicit and clear as possible in anything that you put in writing. All right, the last thing I wanted to say is to be cautious, and this has to do with volunteers, unhappy volunteers. You want to exercise caution anytime you're thinking about compensating a volunteer. It's very important that you distinguish between unpaid volunteer roles and paid employee or staff roles. And I think some nonprofits, in their eagerness to provide a good experience, want to provide some compensation to a volunteer. It may be a gift card, it may be a small amount of money, but it's kind of a danger zone when you shift from having two different types of workers, one unpaid volunteers and paid employees, to having volunteers that are paid something. So there's an article on our website about this issue, and if you want to follow up with me by email, I'd be happy to send you the link. But it gives some cautionary notes about the dangers in paying volunteers a little something. Let's go ahead to the next slide. And before we start talking about unmanaged conflict on the board, let me just pause and ask whether there are any questions based on the first two topics that anybody would like to ask.
Sure. I am just checking for questions. We have a lot of questions about the handouts that are very helpful. And so far, no. I see some things about volunteer, but it was mostly about just what you said.
Okay. So, Kinkini, one thing to keep in mind is if there are questions that would be easier for me to answer offline, if you'll send me a list of those questions with the email addresses of those folks who asked the questions, if that's possible, I'm happy to reply one-on-one to folks after the session. And I believe my email address was provided on the handout. So if you have a follow-up question on anything we talk about today, please don't hesitate to reach out to me by email or telephone, and I'll address that question. Sometimes it's easier to ask that question when you have more time to add some additional explanation to the background to the question.
Well, great. Thank you so much, Melanie. There is one question that just came up which might be relevant to pretty much everyone on here. So what other ideas do you have to honor volunteers? Because so many of our coalitions really rely on, they don't have paid staff, and they do have it's run on the back of volunteers, and some more than the others. So are there any ideas you have about how one might honor volunteers without payment coming into the mix?
Sure. So I think recognizing volunteers is so important, and I would encourage you to do so without providing compensation, because when you provide compensation, you really do financial compensation. You really are risking turning somebody into an employee when you do that. So recognition. Grateful thank you. I just finished up a term on a nonprofit board I've served on for 5 years just this weekend, and there was some mention of that at the board meeting, at my last board meeting, and it was very nice. The chair of the board made some comments that were very thoughtful and appreciative, and I certainly was grateful for those comments. But you know what probably meant the most to me was a note, a handwritten note in a card that was given to me as I was leaving, just thanking me for my service. And what was so interesting, too, about that card is that in the card, the author of the note really took time to reference all of the different ways I had volunteered at this organization, you know, the different committees I had chaired and the work that I had done. Instead of just saying, thank you for your service, kind of in a generic way, he took the time to write in a very specific way what he was thankful for. And you know what, that meant a lot to me. It's one of those notes that you don't want to throw away, because it's very specific, and it reminded me of the work that I'd done. So I would say that when you offer recognition for a volunteer, take the time to be specific. You know, all of us have received something that was kind of a generic thank you, but I think those specific thank yous and recognition, and in addition to the public recognition in front of some sort of audience, the one-on-one thank you in the form of a handwritten note that just says, thank you so much for your leadership and the work that you've done in the following areas. To me, that's the best way to recognize volunteers, and you'll leave them with something that they will have a hard time forgetting. So that's my suggestion in response
Thanks,
to the
Melanie.
question.
Great suggestion.
Sure. So my next topic on the list is unmanaged conflict on the board. So let's go ahead to the next slide. So why is this a concern? Why should any of us be worried about conflict on a board of directors? Well, a couple of reasons I want to point out. The first is that when you have conflict on the board, people tend to coalesce around individuals on the board. They tend to relate to certain board members more than others. And so when there's conflict between two people on the board, you're likely to have factions created. So instead of, Joe and Mary having a conflict, you end up with Joe's team and Mary's team. You have two different teams. You may have 3 or 4 different teams of people that are in conflict with one another. And because the purpose of the board is to set the direction of the organization, when you have conflict and you have people coalescing around different positions or different people that they align themselves with, basically what you're doing is pulling the organization in a different direction. You're certainly making it hard for the organization to move full steam ahead. You can't move in one direction as fast and effectively as possible when there are factions on the board. Another concern that makes me worried about conflict and makes me focus or leads me to focus on conflict is that when you have conflict between members of a board, you're wasting time. You're wasting time. Conflict is a waste of time. Unmanaged conflict is a waste of time. We'll talk in a few minutes that having some conflict can actually be healthy for an organization. It can lead to very healthy and productive discussions, but when it's unmanaged or ignored, it's a waste of time. The third issue is that when you have conflict, there are some people who serve on boards who don't have the stomach for it, and they will walk away. They will walk away, and I've seen this happen time and time again, where you had a really talented board member who just said, you know what, I'm meeting, I serve on this board, we meet nights and weekends, I'm a volunteer. I'm not going to come to these meetings if we keep getting into these ridiculous arguments and conflicts. I'm going to go home and do something else. I'm going to spend my free time in a different way. And, it's funny, it's never the least competent, it's never the least dedicated, it's never the people that you almost would want to walk away that leave. It's the talented board and staff leaders who walk away when conflict arises. So these are 3 reasons why we need to worry. Let's go ahead and look at the next slide. Hopefully this cartoon by Dave Walker doesn't reflect any of the board meetings that you attend and that your organization conducts where people are so upset with each other that they're not listening to one another. Let's keep going. All right, so here are my risk tips for managing conflict on the board. And I should say that conflict is really inevitable in the life of a nonprofit organization. So like a crisis, you cannot take steps to make sure that you never have a conflict. You're going to have a conflict, and eventually you'll have a conflict between board members. It happens to every organization. We're talking about managing those conflicts. So my first tip is you need to decide how conflict will be managed before it arises. What will you do if 2 people on the board or factions on the board emerge and they are in conflict? One technique is called the ouch technique. And the way this works is if someone on the board feels that somebody else has said something that is offensive, so they've been offended by a colleague on the board, that person who has been offended has an obligation to raise their hand and say, ouch. And after they say ouch, they say, Dave or Joe or Mary, whoever they want to address that remark to, what you just said offended me, or I take offense to what you just said. It sounds as if you're saying that my idea was stupid or has no value. So basically we're putting responsibility on the person who has been offended to speak up in the moment and acknowledge that they've been offended. And when this technique works well, the person who hopefully inadvertently offended somebody else says, I'm so sorry, Dave. I didn't mean to offend you. Let me restate my position on this issue. I've seen this work on a national board, and it works really well. And what it does is it allows that conflict to be addressed in the moment. When you don't address conflict this way and get it out right in the moment, what happens is people take it to the parking lot. After the meeting is over, they gather in these little factions and say things like, can you believe the way that Dave spoke to Mary? I can't believe he said that to her. So we want to address conflicts when they arise in the moment. The second tip is make certain that you have an accountability point person on the board. You know, when you serve on a nonprofit board, you should be held accountable. Accountable means doing what you said you were going to do. That's really what the word refers to. And sometimes when we serve on nonprofit boards, we don't do what we said we were going to do. We agree to chair a committee, but we never convene meetings. We agree to submit reports. We forget to do so. We run out of time. We agree to raise money. We agree to make a donation. We agree to lots of things we don't do. You cannot allow those commitments those failed commitments to just sit there. Otherwise, you're going to have an ineffective board, and you're going to slow the organization down and really make it impossible for it to achieve its mission. So you need to have somebody on the board who's the accountability point person. I think there are two people who make great candidates for being that accountability point person. The first is the board chair. Many board chairs are very good at having that one-on-one conversation with somebody and saying, look, you agreed to be the treasurer, which means that you need to convene the finance committee 3 times per year, and 6 months have gone by and you haven't done that. You really need to step up and do that, or step off and step down as treasurer, right? So some of us have board chairs that are fully capable of having those conversations. But sometimes the board chair doesn't want to be the bad cop. Sometimes the board chair wants to be the good cop and be the person who's constantly offering encouragement and positive thoughts and speaking positively all the time. And if that's the case in your organization, then you need somebody else to serve in that role. Another potential candidate would be the chair of the nominating committee. Some of our boards call this the governance committee or the board development committee, but the person who's responsible for leading a team that decides who will be the board members of the future. Sometimes that person will be a good accountability point person, but anytime a board member doesn't live up to their responsibilities, somebody needs to call them on it. And I would much prefer that it be a one-on-one conversation. What I don't want you to do is make the mistake of thinking that if you make a general, vague announcement at a board meeting that, you know, we all need to be accountable, that the person who's not doing their job will understand the message. You really need to address those messages directly to the person who is not living up to their responsibilities. Another tip I wanted to share in terms of managing conflict at the board is to make certain that you're incorporating team building activities at your board meetings and certainly at your board orientation. When you do that, it's a great use of time because it helps create trusting relationships between members of the board. And when people trust one another, they're much more likely to speak candidly when they're in conflict with another person. Many of us are reluctant to say anything, to be critical, or to be overly candid when the person across the table is someone we don't even know. But once we get to know that person and trust that person as an individual, we're much more likely to be comfortable raising those conflicts as they come up. Another tip is to differentiate between dialogue and debate. You know, the word debate is often used in discussions about board deliberations and board meetings, and I think it's the wrong word. You know, I hear board chairs say once in a while, we're going to debate the budget tonight. What you want the board to do on any issue is engage in dialogue. And there's a difference between dialogue and debate. Let me see if I can just draw that distinction for you. A debate is when two people come to the table, come to the podium, believing that each one is right. So when I come to a debate, I think I have the answer, I'm right, and my job in a debate is to convince the audience that the person I'm debating against is wrong, that I have the truth and they do not. That's what a debate is. And I know everybody on the call today has watched at least one political debate. Probably some of you have watched many, many debates. So you know what I'm talking about. In a debate, the debaters come believing that they are right and their opponent is wrong. There is no place for that in a nonprofit board meeting. So instead, what you want is dialogue. Dialogue is where you come to the board meeting with some ideas, with questions, but you don't have the answers. And you're hoping and looking forward to engaging with others on the board to figure out the answer. Dialogue is really healthy at a nonprofit board meeting. Debate is not. So I would encourage you to stop using that word debate and think more about dialogue, where you don't have the answers. You have a lot of questions. But luckily, you're on a nonprofit board with others who are bright and committed to the cause and the mission, and working together, you're all going to figure this out and get to the right answer. And then the last risk tip is that we really need to strive for that culture of candor, where not only is it okay to speak the truth and to speak up if we think the organization is going in the wrong direction or about to make a inappropriate decision, but that we almost feel this moral and ethical obligation to speak the truth. And of course, you can always disagree without being disagreeable. You can say, I disagree, or you can vote no if you believe that the vote should not move forward. Vote no. You don't need to be disagreeable in doing so. But that's what that culture of candor is, that sense of, I have to speak up. It's not that I should or maybe I could, or just because everybody else is going in a different direction doesn't mean that you should stay silent. So I think the culture of candor is really important to managing this risk of unmanaged conflict on the board. All right, let's go on to the next slide. So this is an interesting quote from an article that appeared in Fast Company about the need to control, which is at the root of many workplace conflicts. And what the author is reminding us really is that power struggles exist in almost every context, and certainly in every organizational context I can think of, including nonprofit board meetings. All right, let's keep going. All right, we're going to talk about what I'm calling directors and officers risk and some trends in this area. Let's go to the next slide and take a look at what has changed. Well, what's happened recently in recent years is that historically, or for a couple of decades at least, most of the claims or lawsuits filed against nonprofit organizations that were covered under what's called a directors and officers liability policy, most of those claims and lawsuits alleged some form of wrongful employment practice. So employment discrimination, wrongful termination, sexual harassment, something of that nature, something employment related. But what's changed is that today a growing percentage of claims that are actually covered under DNO policies are alleging something different, something that isn't related to employment. Claims related to the merger of two organizations, claims related to the publication of intellectual property, claims that arise from competition between two associations, claims related to opposition to some rule-setting activity. This is particularly true in the amateur sports field. Claims arising from divisions and factions occurring within religious organizations. So just some examples of how claims that are covered under DNO policies are changing. They're not all employment related. Certainly the majority are employment related today, but there's a growing percentage that are not employment related. Just an interesting fact on the topic of nonprofit mergers. I read something not too long ago that says that 95% of all mergers, and that would be for-profit, nonprofit mergers, both types, 95% of all mergers lead to litigation. So even though two organizations may come together and merge, and it seems very peaceful at the time, down the road, litigation can result. All right, let's keep going. All right, my risk tips for these potential DNO claims or claims that might be covered under your DNO policy. The first would be anytime your board is about to make a critical decision, make certain that you're deliberate about that decision, that you take the time to deliberate and to discuss and engage in that dialogue that I was talking about a few minutes ago. Schedule time for thoughtful questions of review. Also make certain that you record the decision-making process, that you've got record of that due diligence, and that your minutes don't reflect that you had an incredibly important decision to make and you made it in just a few seconds. Also consider reviewing the bylaws of the organization so that they suit and really support your evolving governance requirements. One of the things we do at the center from time to time working one-on-one with organizations is we take a look at bylaws and we update and help update bylaws. And what I find over and over again is that so many organizations allow their bylaws to become stale. The bylaws reflect how the organization operated 10, 20, 30 years ago and not how the organization operates today. It really isn't difficult to update bylaws. You have to follow the procedure in the bylaws about how they're updated, who gets to vote on the revised bylaws, and so forth. But it's something that really happens internally in your organization, and you generally don't need to file those revised bylaws anywhere, but they should reflect how your organization operates. I also think it's important that the board is talking about risks that arise from its governing activities, from the work of the board, and they should really be responsible for understanding and managing those risks. And my last tip is that I would recommend that you adopt a conflict of interest policy for the board that will enable you to surface rather than hide potential conflicts of interest. Unfortunately, many of our organizations, and some that I serve on, adopt a conflict of interest policy that really sends a message that a conflict of interest is a bad thing. And therefore, when asked, do I have a conflict of interest, my tendency is to say no, because I don't want to say that that I've engaged in something that's inappropriate, that I have a conflict of interest. When the truth is that conflicts of interest on the board can actually be quite healthy. Conflict of interest on the board occurs when somebody has a personal stake in a matter before the board. So let me give you an example of that. I've served for a number of years on the board of a middle school that my daughter attended. While my daughter attended that school, I had a conflict of interest. How? Well, my daughter is a student at that school, and I'm a customer of that institution, and I'm paying tuition for her to attend that school. And so when it comes to voting on a proposed tuition increase, I have a conflict of interest because personally, I would like the tuition to go down. I would like to pay less. It's not in my best interest personally to vote on a tuition increase. But when I'm at the board meeting, my job is to think about what's best for this institution going forward, not what's best for my own pocketbook. So that's an example of a conflict of interest that actually is a good one, in that because my daughter's a student at the school, I'm interested in its success. I have a stake in the success of the institution, but I do have a conflict of interest. All right, let's go on to the next slide. All right, before we move on to tax-exempt status, number 5 on our list of 10, let me just pause and ask Kinkini whether we have any questions you'd like me to take right now about our last 2 topics. Number 3 was unmanaged conflict on the board, and number 4 was DNL risk.
So, thanks, Melanie. This is fascinating. I'm taking notes as I listen as well. So, what basic DNO coverage would you recommend for a board without employees when it's just a volunteer organization and a board?
Right. So that's a fantastic question. Many organizations buy DNO coverage almost as their first policy, and it's important to recognize that DNO coverage protects an organization against claims alleging wrongful management decisions. In a nonprofit that has no employees, management decisions are made by the board. Okay, so a DNO policy could still be quite relevant, particularly given the types of exposures I talked about under number 4, those non-employment related exposures. Keep in mind that the majority, some probably close to 80% of claims filed under DNO policies are still employment related. So if you don't have employees, you have 20% of the total exposure that an organization with employees has. So your risk is much less, but you are at potential risk for a claim alleging a wrongful management decision. So you might argue that a DNO policy probably be a good idea if you can afford it. There's never been a better time in the last 10 years or so, maybe even longer, about 15 years, to buy DNO policy because the prices are relatively low. We've been in a long period of what's called a soft market where there's great competition for your business, and you should get quotes from a couple different companies, and you'll find that the coverage is much more affordable now than it even was 15 or longer, many years ago. So what would I recommend? If you have no employees, I don't think, and you're a relatively small organization, which I assume you would be if you have no employees, then I would suggest a policy with a pretty low limit of liability. Most nonprofits that buy DNO buy a policy with a limit of $1 million. That's probably the most commonly purchased limit. But some companies will provide a policy with a lower limit, such as $500,000 in coverage, again at a lower price point, right? So the limit of liability definitely comes into play when we're talking about the total price, the total premium that you'll pay. So I would recommend, if you can afford it, that you consider starting with $1 million limit. But if the premium associated with that $1 million limit is too much for your organization and you still want to buy DNO, then you might want to consider a policy with a smaller limit, such as $500,000. At one time, some years ago, there were companies offering even smaller limits of liability for D&O, such as $250,000. I don't know if that size limit, that low of a limit, is still available.
Thanks, Melanie. And
Sure.
for the person who asked that question, we do have, USBC's DNO policy and some of the other coalitions, and we'd be happy to share with you on the coalition's learning community. We have a brand new website, so we are still uploading resources on on our learning community, and we will be uploading or sharing with you, the questioner, some of the information that you're asking for, but this is important to know. Thanks, Melanie. All right,
Sure.
No more questions.
No problem. So let's talk about tax-exempt status, which is number 5. Let's go ahead to the next slide. And on the slide, I've listed 6 categories of danger for 501c3 nonprofit organizations. So that's going to come up next. There we go. 6 categories of danger for 501c3 nonprofit organizations. So you see them listed in front of you, and I'm going to go over them one at a time. We're going to talk about them in turn. So the first issue is private benefit or a prohibited enormement. So a 501c3 nonprofit organization's activities should always be focused on achieving that tax-exempt purpose. This means that your activities should not serve private interests or convey any private benefit to an individual or another organization more than insubstantially. So this relates to the idea that a 501c3 nonprofit's purpose is to serve the public interest and not private interests. So the concept of prohibited enormment is that no part of an organization's net earnings may inure to the benefit of a private person who, because of that person's relationship to the nonprofit, has an opportunity to control or influence its activities. So what this means at a very practical level is that a 501c3 nonprofit may not allow its income or assets to benefit insiders. These are the people that have the opportunity to control or influence activities. It's important that word opportunity is really important, because it's not that you actually do control activities, it's that you have the opportunity to control or influence activities that makes you an insider. So insiders tend to be board members, officers, directors, and employees. So prohibited enormement includes things such as the payment of dividends, the payment of unreasonable compensation to your staff, or the transfer of property to insiders for less than fair market value. So, for example, if you were to have a television set that you no longer need and its value is about $500, and you were to sell it to one of your employees for $50 because employee is a nice person and you want to give them a deal, that could be construed as prohibited enormement. You've transferred an asset to that employee at less than market value. What's the risk? If a 501c3 nonprofit engages in enormement or substantial private benefit, you risk losing your tax-exempt status. In addition, anyone considered guilty of enormement may be subject to an excise tax. All right, let's talk about the second topic, which is lobbying. So lobbying occurs when an organization contacts or urges the public to contact members or employees of a legislative body for the purpose of proposing, supporting, or opposing legislation, or when an organization advocates the adoption or rejection of certain legislation. Now, contrary to a widely held misconception, 501c3 nonprofits may do some lobbying. The real risk arises if a nonprofit conducts substantial lobbying. So there are 2 ways to manage the risk of crossing the line. The first is to have the nonprofit's lobbying activities measured by what's called the expenditure test to determine whether or not those activities are substantial. This is sometimes called the 501H election. When your nonprofit makes this election, you agree not to spend more than a certain percentage of your total expenses on lobbying. The second approach is called the substantial part test. And this is achieved by considering whether lobbying comprises a substantial part of your organization's overall activities. So those 2 different options with respect to lobbying, but it's important to recognize that 501c3 nonprofits may do some lobbying, but the key is that you're prohibited from doing substantial lobbying. All right, let's talk about political activity. So all 501c3 organizations are prohibited from either directly or indirectly participating in or intervening in a political campaign on behalf of or in opposition to any candidate running for public office. So this applies to all campaigns, so federal, state, and local level campaigns. And what's really important to understand is that political campaign intervention includes any and all activities that would favor or oppose one or more candidates for public office. Now, contributions to political campaign funds or public statements of position made on behalf of an organization in favor of any candidate would clearly violate that prohibition on political campaign intervention. Now, Section 501c3 organization may engage in some activities to do things such as promoting voter registration, encouraging voter participation, or providing voter education. But it can't constitute or be an activity that favors or opposes a candidate for public office. Now, keep in mind that political campaign intervention prohibition is not intended to restrict anyone's free expression on political issues. Certainly not the free expression on political issues by leaders of the organization, of a nonprofit organization who's speaking for themselves. And tax-exempt nonprofits leaders are not prohibited from speaking about issues of public policy. You want to protect your tax-exempt status by never making partisan comments in an official organization publication or at official functions of the organization. So those are the important tips there. Now let's talk about unrelated business income. So another activity that can potentially jeopardize your tax-exempt status under Section 501c3 is having too much income generated from activities that are unrelated to your exempt function. So this income would come from a regularly carried on business or activity that is unrelated to your exempt purpose, the reason you're in business in the first place, the reason you were given tax-exempt status in the first place. If your nonprofit generates that unrelated business income, you'll have to pay taxes on that income as long as 3 conditions are met. The first condition is that the activity must be a trade or a business. The second is that the trade or business must be regularly carried on. And third, the business activity must not be substantially related to your exempt purpose. Some of the most common unrelated business income generating activities are the sale of advertising space and the sale of merchandise. So in addition to potential income tax liability for that income that you've generated, that unrelated business income, if that unrelated business activity is substantial in relation to what you were set up to do or described as your exempt purpose in your application for a tax-exempt status, your tax-exempt status could be in jeopardy. So you're at risk of losing that tax-exempt status. All right, let's turn our attention to the last 2 items on this topic. The first is the annual reporting obligation. It's always good to remind ourselves that even though as 501c3 nonprofits we're exempt from paying federal income tax, we do have an annual reporting obligation under the Internal Revenue Code. We must file either a Form 90, a Form 990EZ, or a Form 990N, which is also called the electronic or e-postcard for tax-exempt organizations. And it's important to recognize that if you forget to file your form for 3 consecutive years, you will automatically lose your tax exemption. There's a great section under the IRS website, irs.gov. It's called the Nonprofits and Charities section with lots and lots of information on how to protect your tax-exempt status and also information on these 3 different annual reporting forms that apply to 501c3 nonprofits. The last topic or subtopic under this list of dangers for 501c3 nonprofits related to tax-exempt status is number 6, operation in accord with your stated exempt purpose or purposes. When a nonprofit stops doing all or a significant amount of those exempt activities that it told the IRS it was going to do in that original application for exemption, it is at risk of losing its tax-exempt status. So what's important to remember here is that when an organization's direction changes, it starts doing something very different from what it was set up to do, it's important that you keep the IRS apprised because if the IRS discovers that you're doing something very different from what you sought that tax-exempt status for in the first place, it could simply revoke your tax-exempt status and you really have to start all over again. All right, let's go ahead on to number 7. or number 6 on my list rather, copyright and trademark violations. And let's go to the next slide. So I want you to be cognizant of the risk in this area. And this is as complex, maybe not more complex than some of the other areas we've talked about, but it really is an important exposure facing virtually all nonprofits. So a couple of facts on this slide. The first is that copyrights protect written and artistic expression. Trademarks protect the names and symbols that identify the source of goods or services. And patents protect inventions. So we could go on a lot longer and talk about these 3 different categories, but I thought I would start with those 3 basic definitions. Another definition that's important to understand is copyright infringement. Basically what that refers to is exploitation of a copyright owner's rights without permission. Let's go to the next slide and we'll take a look at some tips for dealing with this risk. So I'm going to highlight a couple of things on this list, and I included all of them in your handouts, so you don't need to write these down. Make certain that you use a copyright notice on materials published by your organization. And we suggest that you indicate copyright with a little copyright symbol, and then the year, and then the name of your organization. Make certain that that notice is on a prominent location on your publication. For any sort of substantial written material, you might want to consider registering your material, certainly if it's a book, if it's as substantial as that. Registering your published materials with the U.S. Copyright Office. There's a fee associated with that. It takes time to do it. You don't have to register in order to enjoy protection under the Copyright Act, but under copyright laws. But if you register, you're eligible for what's called statutory damages. And the simple way to think about statutory damages is like automatic damages. You don't have to prove that you lost money because someone stole your book. You're eligible for statutory damages simply if you can prove that it was indeed stolen. Otherwise, it's up to you to prove your damages, and any compensation you receive from the thief will be based on your actual damages. So that's a reason to register with the Copyright Office. But the truth is, if you're an organization like the Nonprofit Risk Management Center, you're publishing quite a bit, and each day people on your team are publishing articles and fact sheets and blog entries, etc. And it's cost prohibitive to register all of your copyright material. Another thing I want to point out, or risk tip I want to point out, it's the 5th bullet on this list, and that is to clarify in your personnel policies that anything created by employees during the scope of their service to your organization or in the scope of the period of time in which they're employed by your organization, anything created by them to support your mission is property that belongs to the organization, and that the organization owns the copyright. So somebody who's written an article for you while an employee of the organization doesn't own that copyright personally and walk out the door with it. That property is your property. It was created during as part of the scope of employment. Let's see. I think that's the rest of the tips are self-explanatory. So let's go ahead and move on. All right, number 7 is an important topic, conflicts of interest. And we've talked a little bit about this already, but I want to add a few thoughts. Let's go to the next slide. Why are conflicts of interest an issue in nonprofit organizations? Well, and how does a conflict arise? Conflict arises when an individual is in a decision-making capacity or role in an organization, and they have some personal loyalty to another interest, such as a business they own. So for example, if a board of directors includes an individual on the board who owns a private business, a conflict could arise where he or she decides that the decision the board's about to make would somehow hurt her business. It also arises where an individual on your board would have the opportunity to make a decision that would give them some personal benefits. So for example, your organization is going to hold a conference, and one of your board members happens to own a conference center, own stock in a conference center. And if you book the conference at that conference center, that board member will generate some earnings from that booking. Right? That's an opportunity for personal benefit. Another way that conflicts arise on a board is where you have a personal or professional relationship that might affect one's perspective or vote. So I'll just give you a personal example of that. So I serve on a board, I've been serving on a board with one of my colleagues here at the center. We've both served on the same board together for the last several years. And we actually have to disclose that in the Form 990 that the organization files, that two of its board members have a relationship, a work relationship. They both work for the same organization. So why would that be a conflict of interest? Well, it's a conflict of interest in that it's possible that we could get together and I could ask her, please vote this way, and since you work for me during the business hours, I want you to vote with me at the board meeting tonight with this other nonprofit organization. That I could have undue influence over how she votes at the board because of our employment relationship. Now, some conflicts of interest are real and need to be acknowledged and dealt with, and others are simply perceived. People may perceive some relationships and the potential for undue influence. It's really interesting. I sometimes find that after being on a board a long time, I discover that people have relationships I knew nothing about. So I served on one board many years ago where nobody ever mentioned that two of the board members were employees of a third. And so these three all worked for the same company, and one was the boss, and the other two were his direct reports. No one ever mentioned it. Now, it should have been disclosed on the Form 990. It should have been mentioned. But as I look back on how the votes were taken and how that board operated, those three always seemed to be in alignment. And now I can look back and understand why. All right, let's go on to the next slide. So here's my risk tip, my one risk tip on this topic, and that is make certain that you have a very practical process for surfacing conflicts of interest, that there's a way for people to raise their hand and say, you know what, I have a conflict of interest on this issue. In some cases, you'll want that person with a conflict to remain in the room and talk about their perspective and share their perspective and also vote. You'll say, you know what, it's okay that the two of you work for the same organization. We don't think that needs to come into play in this vote. We want you both in the room for the vote. In other cases, you may say, you know what, that conflict of interest is a concern. How about if you stay in the room for the discussion, but you leave when it comes time to take the vote? So that's my tip that I wanted to share about conflicts of interest. Have a practical process for surfacing conflicts of interest. Make certain that everybody feels comfortable raising their hand and acknowledging, hey, I have a conflict of interest. The worst situation is where people feel that conflicts of interest are almost the scarlet letter of today's governance, and therefore no one would ever want to admit they have a conflict because everyone will be looking at us, pointing fingers at us, and being suspicious of us. The truth is that most people who serve on a nonprofit board have at least a conflict of interest in some circumstances. You know, many of us bring those conflicts to bear. It really means that we have some personal interest in the issues before the organization, which, you know, the truth is that's why we come to serve on the board in the first place. We want to be on the board because we're interested in the cause. All right, let's go ahead to the next item on our list, which is careless contracting. And we can go ahead and proceed to the next slide. Why should we worry about contracting risk? Well, in so many cases, when we look at contracts signed by nonprofit leaders, we see vague terms or poorly understood terms, and that many people are signing contracts they simply don't understand. What could happen? Well, if you don't understand what you're signing, you could be agreeing to something that is really beyond your means. A common example, a classic example, is agreeing to an attrition or cancellation clause in a contract with a venue, with a hotel, with a conference center, and saying that, you know, if you don't bring the number of people you're hoping to bring, you'll pay thousands of dollars in penalty fees. And if you don't understand what that means and you don't have the attendance you were hoping for, your nonprofit could end up with a huge bill. And gosh, this has happened so many times in my career with organizations I've worked for or worked with. Another reason to worry is that if you sign a contract you don't understand and you're unable to live up to the promises in that contract, your relationship with that partner, that client, that other entity is probably going to be harmed, and it may be irreparably harmed, and you may have a really hard time ever getting it back on track. A third reason to worry is that you could be sued for breach of contract if you don't live up to the commitments in your contracts. And of course, if you have signed on to something, if you've contracted with another organization, you don't really know what you've signed up for or signed on to, the likelihood of breach is greater. And then another reason to worry, it's not really a legal reason, but when we engage in contracts, when we sign contracts that don't go well, where things kind of fall apart, it puts us off the next contractual opportunity. You know, if we sign a contract with a partner and we're in this together, we're going to do a project together, and the project doesn't work out, we're unlikely to want to partner with anybody else anytime soon. So I think it's really important to take the time to understand what we're signing, what we're agreeing to, and understand all of the terms contained in a contract so that we're really in the best position as a business partner, as a collaborative partner. We're really putting our organizations in the best possible position to move forward and partner with others and do business with others to achieve our mission. All right, let's go ahead to the next slide. So some risk tips related to contracting. The first is, if it's an important relationship, if you're engaged in an important relationship with anybody or any institution, whether it be public, whether it be nonprofit, whether it be a private business, whether it be an individual, make certain that you're taking time to draft either a contract or a memorandum of understanding. Also, provide training for anybody who's responsible for looking at contracts. And it's okay to admit that you're reading a contract and you really don't understand what some of the terms mean. If you don't understand what the terms mean, you need to request clarification. You also need to make certain that it's clear in your nonprofit who has the authority to sign a contract, who has contracting authority. And I've encountered this in several organizations where I've worked, where somebody signed a contract when they weren't permitted to. They had no contracting authority, but no one ever told them that. So you need to tell people if they have contracting authority or they don't. Both groups of staff or volunteer leaders need to know. Anytime the contract is for a significant amount of money or it covers more than a year in terms of the relationship, I think it's important to get legal review or at least independent review. So asking an attorney to take a look at that contract and to give you some advice is always a great idea. Hopefully there's somebody you can call on for that type of advice. And then my last tip about contracting is that if you're ever put under pressure, if you feel a sense of pressure to sign, step back. And this has happened to me so many times. Various businesses we've tried to, conduct business with or enter into a contract with have told me, I need it signed by 4 o'clock today. You must sign or the offer is off the table. And it's a pressure tactic. And in almost every case where I conceded and signed that contract at 4 o'clock because somebody was telling me that I had to do so, I lived to regret it. By the following week, I realized, oh no, we should have put some additional things in that contract. Had I only had the weekend to think about it, I would have done so. But because they told me I had to sign by 4 o'clock, I missed that opportunity. So if someone puts you under pressure to sign a contract, you must sign it by today or forfeit the opportunity to do business. I would strongly encourage you to step back and say, no, I'm not going to do that. I'm not going to sign a contract under pressure. In my personal experience, 30 years working in various nonprofits, it's always been a bad decision for me, signing a contract under pressure, because in the vast majority of instances, those contract terms will be valid on Monday. They will, they want to do business with you, and unfortunately, many people in the business world will use whatever pressure they can to get you to sign by a certain date that's convenient to them. All right, let's go ahead to the next slide. So 2 of my most important must-dos of contract review. The first is to read it, to never sign a contract you haven't read. Unfortunately, it's one of those things that many of us do, particularly with multiple drafts. So if you're looking at the 5th draft of a contract, if you're like me, your tendency is to just scroll down to the changes. But I always try to remind myself, go back to the beginning and reread the entire contract before I sign it. And then the second tip is, if you don't understand a single word in the contract, do not sign it. Ask somebody to explain it. And when you go back to the person who sent you the contract and said, could you please explain this section or this paragraph or this phrase to me, don't be surprised if that person says, I don't understand it either. That happens in so many cases. And the reason it happens is that so many people who draft contracts rely on cut and paste as their primary method for drafting a contract. They cut and paste from other contracts, and hence they end up with contracts that contain terms and phrases and sentences and paragraphs that even they don't understand. All right, let's go ahead to the next slide. Number 9, so we'll finish up with number 9 and number 10, and then we'll see if there are any questions remaining on the final few items on my list. So number 9, breach of privacy. Why is this a concern? Why is this something that that organizations in the coalition should be concerned about? Well, the fact is that it's really difficult, and it's becoming increasingly difficult for any organization to balance its need to collect and maintain personally identifiable information, confidential information about anybody, about a donor, about an employee, about a volunteer, it's really hard to balance that need with the obligation to protect privacy. And the bottom bullet on this slide just reminds us that human errors and system glitches are the cause of most data breaches, even though criminal attacks are the most costly. So in many organizations that I visit with and work with, I hear that the biggest fear is that a hacker will get into our network, get into our database, and steal our donor information, our client information. The reality is that most data loss is attributed to people with passwords, to some sort of system glitch or an error on the part of somebody who has a password, a real password, did not hack into the system. Although the biggest losses, the biggest dollar losses tend to be those committed by outsiders. All right, let's keep going to the next slide. I have a couple of slides with tips. The first suggests that you consider doing what's called a privacy risk assessment. And I know there are a lot of words and phrases on this particular slides. I included all of these items on the handout, on page 4 of the handout, so you've got these. You don't need to write these down, but basically the concept behind a privacy risk assessment is to ask yourself, to what degree is our nonprofit at risk of a loss related to breach of privacy? So start by asking, what kind of information do we collect? Do we store it online? How do we disclose that information, that personal information that we collect? How do we disclose it? Do we know what happens to information that includes personal data about employees or clients or donors? How secure is that information? Are we protecting that information? And is there a policy about how long we keep personal information? And if so, do we follow that policy? So basically, a privacy risk assessment is a lot of questions, and they all start with, or many of them start with, do we know? Do we understand? Do we recognize? It's all about what are we collecting? How are we protecting it? How do we disclose it? When do we disclose it? So questions along those lines. So these are just some suggested questions that you might consider if you want to do a privacy risk assessment. What's our risk related to breach of privacy? So let's keep going on to the next slide. All right, so a few risk tips. I think having a privacy policy is one that I would encourage you to consider. Do you have an up-to-date policy about the collection and use and protection of confidential information? Does your policy extend to both physical as well as electronic files? Many of us are overly concerned about files online or kept in databases or in networks, and not as concerned about pieces of paper left on desks. And you could face a breach of privacy claim related to a Post-it note that you left on your desk containing personally identifiable information, just as you might face that claim related to the same information, the same data kept in a database somewhere. Do you have boundary firewalls and internet gateways? Are you using devices to prevent unauthorized access? Have you taken steps to make certain that only people that should have access actually do have access? Have you installed virus and malware protection software? And have you given some thought to cyber liability coverage? If you're a very small organization with no employees, you probably don't purchase cyber liability coverage. It's becoming increasingly popular and common as a product purchased by larger organizations. There's a great article on the topic of cyber liability coverage in an issue of Risk Management Essentials. So you can find that by going to nonprofitrisk.org, and you can search under articles, and you can look for an article related to technology or an article related to insurance, and you'll be able to find that without any difficulty whatsoever. So I would encourage you to take a look at that article if you have any interest whatsoever in potential cyber liability coverage. All right, let's go ahead to our next slide. So the last topic on my list of 10 for today is what I'm calling social media snafus, and this is a topic that we could spend the entire hour and a half talking about, but I thought I would save it for last. It's one that many people are concerned about. I want to talk about 4 reasons why the concern, why we're concerned about social media and why social media is in fact risky as well as potentially beneficial. So the first is the potential for an organization to commit unintentional illegal discrimination. So social media sites offer lots and lots of information about individuals who have applied for paid employment in the organization, as well as about individuals who are currently on staff. But is there a tangible legal risk associated with finding information out about somebody, either an applicant or a staff member, through social media? And the answer is yes. And the reason is that if you discover information about somebody on a social media site, on their Facebook page, on their via Twitter, via any social media account, if you find out information about somebody that you're not permitted to consider in making an employment decision, it's very hard to unring the bell. It's very hard to unknow what you've just learned. So I'll give you an example. You're considering an applicant for employment, and you've decided you've got 2 applicants for the job, and you've decided to check them out on Facebook to see what their Facebook pages look like. And you visit you discover their Facebook pages, and you discover that one has acknowledged their religious affiliation on their Facebook page, and it's very clear what faith they associate with. You're not allowed to consider their religion or their religious faith in making the decision whether to hire that person. And yet, now that you know it, it's very hard to put that out of your head. And should you decide not to hire that person, the person might believe at some point that maybe their religious affiliation was the reason you decided not to hire them. So that's really the crux of the danger related to the potential for illegal discrimination in making employment decisions arising from use of social media. The second issue I wanted to talk about is the fact that if your social media policy is too strict, it may violate the National Labor Relations Act, and specifically Section 7 of the National Labor Relations Act. The National Labor Relations Act applies to all employers, and the essence of the act is that you may not do anything that would prohibit your employees from coming together to form a union, from unionizing. And so what's happened in the world of social media is that some employers have been very strict and said, we don't want you talking about your job on social media. So don't go on Facebook tonight and talk to coworkers about the organization. We don't want you to do that. That's an inappropriate use of social media. Well, unfortunately, if your policy is too strict and you simply tell employees they're not allowed to talk about the workplace on social media, what you may be doing is restricting their ability to talk about the terms and conditions of employment. And all employees in the United States are allowed to talk amongst themselves, talk with anybody they want about the terms and conditions of employment, because those conversations could lead to a decision to try to form a union in the workplace. So you're not allowed to restrict that. You can offer other restrictions, but if your policy is too broad or too strict, if you will, you could inadvertently violate the National Labor Relations Act. A third issue is the potential for violating employee privacy. Some employers are very concerned about what their employees are doing in social media, on social media sites, and so they ask employees, please give us your password. We want to see what you're saying about us on Facebook or Twitter. And this is becoming problematic because a number of states have adopted laws saying that you're not allowed to do that. You're not allowed to ask for somebody's personal password. So you need to be very cautious about this. And then the last issue is the idea of copyright protection. We live in a cut and paste generation where it's so easy with a click of a mouse to copy and paste somebody else's words and thoughts. Unfortunately, you put your nonprofit at risk when you allow your employees or volunteers to copy and paste at will without any understanding and recognition of copyright laws. And so it's a complicated area, and that we don't have time to go into a great amount of detail here, but just a cautionary note that it's probably a good idea to have some policy about who publishes on your organization's behalf, uses social media sites to publish information, and who double checks to make sure that whatever's published is content that's owned by your organization or is being used with permission. So let's go ahead to our next slide. All right, so this is just reminding us about this legislation I referenced that makes it illegal for employers to log into social media accounts without permission. This is from the National Conference of State Legislatures, and at the bottom I've actually included an example of one of the state's laws, which says that no employer shall require, request, or cause an employer or applicant to disclose a username or password or other means for access. All right, let's keep going. The National Conference of State Legislatures, by the way, is an incredible organization that does research on many different issues, and their research typically covers what's happening in the states vis-a-vis that issue. And so if you're interested in kind of a state-by-state comparison of certain legal developments, the National Conference of State Legislatures is a great resource. So I would encourage you to visit that website. All right, my risk tips related to social media. First, adopt a clear but not overreaching social media policy, and make certain that anybody who's either involved in hiring or who's involved in posting to your social media sites is well versed in what they can and can't do. Clarify content guidelines and user authority. Make certain that everybody knows what they're supposed to be doing with respect to social media and representing your organization. And then definitely proceed with caution before doing any research about an applicant online, and recognize that you may discover something that you're not allowed to consider or use in making a decision about hiring, about promotion, about firing. Just be aware of that, because again, as I said, you can't unring the bell. Once you know something about somebody, it's very hard to put it out of your head and make the decision based on things that you are allowed to consider. So I've listed on the slide a few, two articles that I think you may find interesting on the topic of social media. The first has to do with an experiment that was done with respect to hiring discrimination and the degree to which, once you discover somebody's either sexual orientation or their religion, how likely are you to make an adverse employment decision. In this particular study, the adverse employment decision was deciding not to offer somebody an interview. And I think that the results are rather surprising, so I would encourage you to check out that article. You can find that online by just searching by its name. And then there's a terrific article from an attorney, Catherine Ossian, called Legal Issues in Social Networking, and I would encourage you to check that out as well. All right, let's go ahead to my last few slides, and then I'll take a pause and find out if there are any questions. The first thing I wanted to say in closing is that it's so important to learn from experience. Each day we have experiences. We experience different things, different environments, different circumstances, different developments. Even some days we experience a crisis event. I think it's so important to remind ourselves that, as Paul Shoemaker says, experience is inevitable, but learning is not. We have to resolve to learn. We have to say, you know what, I'm going to learn from this experience. And it's funny because actually something happened to me this week. I missed a plane I was scheduled to catch on Monday morning, and the person with whom I was supposed to meet said, you know what, it's okay to miss a plane. It's just all about learning from the experience. And he was absolutely right. Okay, let's go to the next slide. So the second thought I wanted to just mention in closing is that conflict is not always a bad thing. And we talked about one of the risks being unmanaged conflict on the board, but I want you to be clear that I'm not saying that conflict is always a bad thing. I think conflict can be a wonderful thing. And Thomas Crum wrote that conflict can be seen as a gift of energy in which neither side loses and a new dance is created. And I've seen this actually time and time again on nonprofit boards where the conflict is managed well. It's where conflict is ignored and where people take their conflicts out into the parking lot that we get into trouble, and that it creates disharmony that really erodes at the mission of the organization. All right, let's go to the next slide. My last slide has four items from Mark Adelson, who's the author of a terrific book called Beyond Management. And in his book, Mark talks about the goal of having a workplace that's characterized by practical caring. That in today's workplace, it's not enough to just be efficient and productive, but in any organization, I think this extends to any organization with or without staff, that ultimately we want to have a caring workplace, and that a caring workplace is actually the workplace in the organization that's likely to be most effective in the long term. And certainly with nonprofit organizations, that's likely to reach its mission and be more successful in reaching its mission. And Professor Adelson offers 4 suggestions for achieving that practical caring in the workplace. The first is mutual trust. He says that for an organization to be effective, people have to trust one another. There has to be mutual trust. And we touched on that at the beginning of this webinar. We talked about conflict on the board. Another thing that Professor Adelson recommends is active empathy. You know, real concern for the circumstances of others, for what's happening to others, what others are going through. Active empathy, so important to an effective workplace. A third is access to help. And I love this one because I think it's so relevant in most workplaces, if not all workplaces, and that is that everybody on the team, whether it's a board, whether it's a staff, everybody on the team supporting a nonprofit mission should convey this idea that I'm here to help. Please call me if you need help. That's certainly the philosophy here at the Nonprofit Risk Management Center. It's what we try to live by each and every day, that we're here to help, that we want to help you. Please call us. Please email us if you need help. But I think that in the type of workplace where all of us want to be, that access to help is widespread, and each and every employee, will look up and stop what they're doing to help others. And then the last concept that Professor Adelson writes about is related to this idea of a practical to inspiring practical caring in the workplace is lenience and judgment. He said, too many of us are too quick to judge, and we need to be lenient in judging others in order to achieve those other items. In order to be empathetic, in order to be somebody who people come to for help, and in order to engender mutual trust. So those thoughts from Mark I thought were really relevant. So I think that's it for me. And Kikini, if there are a couple of additional questions, I'd be happy to answer those. If anybody has a question that's really pertinent to your circumstances and you'd rather speak to me by phone or correspond with me by email, I'm absolutely happy to take those offline.
Great. Thank you, Melanie, for that phenomenal presentation. There are just so many things out there that are so relevant to all of us, whether we serve in our roles as board members, as staff, as volunteers, and about conflict and interest. So I'm going through. We do have a lot of questions, and there is one still relating back to some of the volunteer compensation, and I think the gift cards and the gifts seem to be a big part of that. While most people don't give monetary compensation. There's a question saying, would you say again that non-monetary compensation through gifts or gift cards are not very appropriate for volunteers?
I think in some organizations, some nominal gift cards, some nominal gift, is okay, and probably won't be considered or construed as taxable income to the volunteer. But it really has to be nominal. I think where we get into trouble is where we start to equate the gift with the hours of service. So what, you gave us 10 hours of service, so we're going to give you a gift card for $2 per hour, so that's a $20 gift card. That's what you're risking doing is turning that volunteer into somebody who's being paid by the hour, being paid in a way that's commensurate with the number of hours or the amount of effort they provided. Right. And the risk there is that you could run afoul of the wage and hour laws. You're not paying them the required federal or state minimum wage. And so in our effort to do something nice, give somebody a little bit of money, we actually get ourselves into a lot of trouble. So providing some sort of small gift or recognition that's unrelated to the number of hours, that's not calculated based on the hours of labor, is probably permissible and not taxable to the volunteer. But doing anything more than that is really risky. And I would err on the side of caution and really focus on ways to show the volunteer appreciation. The word volunteer, if you look up the word volunteer, it means to work without any expectation of remuneration. And that's what volunteer means. And I think we distort that when we start to say, well, let's pay our volunteers something, and let's figure out a fair price to pay. No, we're turning them into employees. And there's so many other things that come up. If we have employees, we're subject to workers' compensation laws. We may be subject to occupational safety and health laws. We may be responsible for employment taxes. We've got the federal minimum wage, the state minimum wage. There's so many other things that arise. We also, when we turn somebody into an employee, we're at risk of claims alleging wrongful termination, illegal discrimination, all these things that don't apply to a volunteer workforce. So we want to exercise a lot of caution, an abundance of caution, and try not to turn a volunteer who is serving because they want to with no expectation of remuneration. We don't want to turn that person into a paid employee.
Thank you. Good advice. And there's questions about social media policy for volunteers and not employees. Does the NLRA apply to a group of volunteers in an org as well?
Right. No, so it doesn't. So the National Labor Relations Act, in particular, Section 7, but the Act itself really applies to employers vis-a-vis their relationship with their employees. So it is not relevant to a volunteer workforce. So you could have a very strict social media policy that says thou shalt not speak about the details of our organization with each other offline or in your personal social media sites. You could do that. But you know what? The risk of doing that, there are other potential negative consequences of doing that. First of all, what kind of message are you sending volunteers where you tell them, don't talk about what happened at this organization out in social media? You could be dampening their enthusiasm and actually raising some suspicion on their part. Mm-hmm. Now, having said that, it's perfectly acceptable to say to volunteers, as a volunteer, you're learning confidential information or personally identifiable information that must be kept and protected, because otherwise we run the risk of a claim alleging breach of privacy. So it's perfectly okay to give that type of direction, but prohibiting volunteers from having any conversations about the nonprofit in social media is probably going too far, and there could be some other negative repercussions of doing that.
Thank you, Melanie. And I'm going to take one last question, and it's a copyright question. They contracted with a company to create their website. The website gave them background pictures and things, and years later this coalition received a cease and desist letter from the company that owned the photos. Photo infringement, basically, with a bill for thousands of dollars for the previous use of these photos. And
right.
Careless contracting again.
Yeah, so interesting. This goes back to contracting as well as copyright and trademark and such, in that in your contracts you want to make certain you're very clear as to who owns what property. And if you've contracted with a company to develop a website for you, you could include in that contract that any images provided by the company will be images that they are allowed to share with you, that they in fact own or have a license to use, and that should there be any claim against your organization related to the use of those photos, they will indemnify you, meaning they will pay the legal expenses of your organization should there be a legal claim. Just so you know, there's software now that's been developed that can go back and look at websites, and it's used by companies that sell photographs to search and find photographs that have been used illegally on websites. But something, I've actually had personal experience with this, because I received a letter saying you owe us X dollars for use of this particular photo. Well, we had purchased that photo. And so I let them know. I said, we purchased that photo from you. And it's unfortunate because it really came across as a scam, that they were just searching for examples of their photos on websites and sending out mass letters to people saying, you owe us money for using this photo. And there was really no filter to determine if actually the customer, in this case it was an organization, had purchased the photo. So be very wary of those letters. Thousands and thousands have gone out by one particular company that's trying to collect money for the use of its photos, and it may be that you actually did own the photo. You purchased it many, many years ago, or the company you contracted with had purchased it. So be cautious about those letters. Don't jump and just send money. Double check your records to see if you actually own the photo, and then, of course, looking forward, make certain that when you're contracting with somebody to provide anything with images in it, that organization has permission, owns the images, has permission to use the images, a license to use those images, and they will protect you if a claim is made against you for misappropriating those images.
Terrific, Melanie. Thank you. And keep an eye out for scams. But I also wanted to, there are questions, lots of great feedback about how great this presentation has been, and a couple of questions that I will follow up with you, Melanie, about specific ones. But I wanted to let our audience know that this is a tip of the iceberg, as USBC's new membership with the Nonprofit Risk Management Center means all of our Breastfeeding Coalition affiliates now have access to the risk management advice, live and archived webinars, and even a discounted $29 price to build your own risk management plans and policies with their web tools. So, and I can't say enough about the Risk eNews. I never thought this would be an interesting topic, but the blogs, and there is so much about good management, how to run an effective workplace. It's a wealth of information. So if you should run and just get subscribe to the Risk eNews as well, and make the most of the membership that USBC has with nonprofit Risk Management Center. So thank you, Melanie, for this terrific presentation. I know that our registrants will be coming back to listen to the recording because there's so much good information in here. I'm going to make a couple of very quick announcements. Our next 222, the CDC USBC webinar, is on June 9th, and the topic is Freedom of Expression, Legal Protections for Nursing Mothers at Work. And Galen Sherwin from the ACLU will be presenting it. And the Midwest, Mid-Atlantic, Mountain Plains regions are having elections to elect their coalition regional reps. Today is the last day. Voting closes at 9 p.m. Eastern time, so please give your voice. Elect a rep who's going to advocate for you at USBC. There are also questions that have been asked for specific of the risk topics, so go to the Power Tools archives, and you'll see detailed webinars on filing nonprofit, how do you file, advocacy versus lobbying. A lot of the topics that were touched before have been, we've had in-depth presentations on that, so do visit our archives. And that brings us to today's session. Thank you for all you do to improve the lives of women, children, and families, and goodbye for now. I look forward to having you all for our next webinar session. Thank you.